Good morning, traders. This is Tony D from easyMarkets in Sydney. We've had a pretty interesting night overnight. The market didn't sell off as some were expecting here in the US stocks ahead of the tax plan, which is meant to be released tonight, but has been delayed until Thursday. Bit of optimism that the tax plan is getting some bipartisan traction here. This has led to the US stock stabilizing, having a small little brief rally, and pushing at the moment higher in the Asian session. Headlines out in the last couple of minutes here on Reuters, suggesting that making excellent progress on the tax bill, and there'll be but didn't really talk up the chance of it being delayed as well. Perhaps there could be a chance here that it does come out later today, maybe snippets, but there seems to be some internal still debate on some of the particulars. Perhaps that's the phase-in aspect, which was the thing which is potentially the biggest downside risk here for US stocks. If they phase it in too slowly, the market takes that as negative, then that could be a little bit of way that you get some dollar yen selling and some US stock market selling. But right now the price action is didn't get a new low, didn't break back below that 2300. The market's looking well supported. 23,200, sorry. Now the US dollar itself was mixed. You did see dollar yen go higher, the euro stall, but the pound rallied. The pound rallied as headlines about the Brexit negotiations accelerating. This was what market likes to hear. Also, the anticipation of this rate hike tomorrow is also helping support the pound. Doesn't take much to light the fuse here. We've seen the broke the previous low, so that the series of lower highs is been broken overnight. So the market is looking towards the top side now. And when the pound rallies, it's pretty punchy most of the time. So top side really, you're talking hundreds of pips, not in small moves. The big levels up back towards that 135 level if the market wants to start moving that way. Pound yen is on the move with dollar yen, and that usually when pound yen's punchy, you do get dollar yen. So the pound moving quite aggressively at the same time. New Zealand dollar had a sharp rally this morning. The quarter-on-quarter unemployment numbers came out much stronger than expected, up 2.2%. The unemployment rate, the official unemployment rate, dropped down to 4.6%. So that's positive on that front. Really, that undermines a little bit of the idea that the RBNZ targeting full employment is going to be a negative for the New Zealand dollar because the unemployment rate is nearing full employment. So adding that in isn't going to have that big an impact in the short term, given that employment's not the issue. It is inflation that is the issue. So we'll see if that comes through in the next few days. We do have an RBNZ meeting next week. That could be interesting here for the markets. Going forward, the Aussie dollar is very stable, flat at around the 76.50 levels, failed at the 77 level. Just bring up the hourly chart here. You can see that the market is going nowhere quickly. Only the Aussie Kiwi, which dipped down earlier today, was providing a little bit of volatility. That pair has pulled back from recent highs and could be an interesting way of expressing some weakness in the Kiwi dollar going forward. A lot of interest to buy that, but the big level is that 110 level. So the market's still a little bit above that. We'll see how that plays out in the next couple of days, given the Kiwis' resurgence. So with the pound outperforming, the pound crosses, the euro pound selling that we've had here since the ECB meeting last week is now back down at recent lows. We'll see if it can break down through that low. That will get the market more excited to push even lower, down towards maybe the 85 level would be on the cards if the euro was going to straggle behind the pound in the next couple of weeks, given that the euro's the own rally mechanics have been delayed. But it's not all it's not all free to suggest that the pound's off to the races here. You got to remember that even if the Bank of England raises tomorrow, if they talk up the chances that the Bank of England stopped raising now, that it's one and done, that all they were doing was taking away the emergency rate cuts from the Brexit fears, then perhaps the market then will have to temper some of its expectations of further rate hikes from the Bank of England anytime soon. That can lead to a little bit of pound buy the rumour, sell the fact afterwards. All right, guys. Well, look, if you want to look at any particular pair in particular, or if you want to discuss some of the price action overnight, don't be afraid to come through to the dealing room. If you're a member of ATG, if you're not, you can find the sign up link below.